Good evening. My name is Daniel Young. I am the owner and founder of Adaptive Perspective and the Adaptive Perspective social media platforms. And I'm back to talk closed-end funds and overall investment strategy. And I'm going to do something in this video that I don't normally do at all. So this is an unedited video. Who knows what you'll hear in the background as I film these at my house. My cat just ate, and he is rambunctious. And yeah, he eats, and then he gets Twitter pated, and he looks for action and trouble. So who knows if we'll see him or not. I am not a financial advisor. I am a financial strategist and just an overall all-around strategist. And I don't speak like the herd. I walk in limited company, and sometimes I walk alone. And I like raw videos. This is completely transparent, uh, raw. I make mistakes. You get to see my stutters. It's everything. And what I'm going to do this video, which I'll be honest, I've never done. Uh, I have no notes at all. And I wanted more of a conversation than anything. See, the picks this week are the same picks as last week. And I can go through the normal rigmarole and the process of screening through the list. And I can talk about targets and screening and picks and all the normal stuff. But quite honestly, it's going to come down to the same too, for the same reasons. FSCO, because it's an all U.S. corporate bond company that is also a business development company or a business development lender, and I think that's great for the coming economy and the incoming administration. HFRO remains it's just dog. I don't quite understand why. I get the premise. I mean, they are primarily self-invested through their management company. Like the management company is investing maybe 25% of the fund into themselves. I kind of get that. Uh, they've never really given the shareholders a great answer on that. Their their shareholder call, like there's a ton of other real estate stuff in the market besides NextPoint. So why go? Um, I mean, really, just why go balls to the wall on self investment when there are a lot of other great business deals in the market? But following the shareholder call, I do see some light at the end of their tunnel, and Michael Foster with the Contrarian Outlook agrees. It's things are not as bad as how they're viewed. They're making their payments, they're making their dividend payments, their overall value is going up. They seem extremely well positioned for the incoming presidency or in the incoming administration. It's just getting through the next month. And that's kind of everything right now. When we talk in the market, we talk about the economy and inflation and the Fed and all this other stuff. It's very easy to blend everything together. But you really do have to look at it at almost as if they're different people or at least different entities. We have the economy at large, we have the stock market at large, and we have the investors inside the stock market at large. We have seasoned investors who are not as concerned about the dips and the rises. We have newbie investors who panic, right? Like any sign of fear, any sign of doubt, and they just freak out and they pull money out of the market, and then we end up with dips. You have the Fed who's controlling. They're trying to control everything. They're trying to control the long and the short term rates. Uh, they're, they are controlling inflation, and their manipulation is really what positions us right now. So I could start at any number of places, but we'll start with the Fed. So the economy, well, no, we'll start with the economy. The economy seems to be chugging along. It's resilient in the sense that it's still going, but it's not crazy good because, quite honestly, if it was crazy good, people wouldn't have to tell us it's amazing every day. We would know. Like inflation would be lower. We would feel like we were making more money. We would feel like we were making progress. Our credit card debts would be lower. Our bills would be lower. Gas would be lower. You would be able to see it and feel it and be like, huh, the economy's doing pretty well. Everything's going pretty well. but it's not going pretty well. Inflation is sticky, or we're in stagflation. And it is that way because the Fed's manipulating things. The Fed just lowered rates. And what did the market at large do? The market at large freaked out because the market at large, which is heavy set on newbie investors, went, oh my gosh, maybe a recession is coming. Maybe inflation is here to stay. Maybe we won't see that no landing. And it's stuff we've talked about for like a year, maybe even a year and a half. But the bulk of that newbie investor crowd isn't in the same circles we are. They get their news from the same people that are telling everybody that the economy is amazing. Go figure, they're getting misled. So the Fed lowers rates, not a crazy amount, but the Fed lowers rates and then says, we don't know how much we're going to lower rates next year, which is a power grab. I mean, it is. So the economy is chugging along and it's expectantly looking forward to the new administration. Less regulation, easier to get oil, easier to make a lot of other things. It's expectantly looking towards that. So it just keeps going. It's almost like it's like you can rain on its parade, but there's no way you're gonna hold it back or tap it down. Inflation is here because the Fed is here. The Fed is lowering rates, but they're also printing money. There's no other reason to explain why inflation is still increasing other than the Fed is printing money. And they kind of have to. One, they're trying to juice the economy, which the economy is chugging along. They don't need to juice the economy. The other reason is between the Biden regime and Congress, they're all spend happy and they're promising money to everything else besides America. So if we don't have $50 billion and they're promising $50 billion to pick a country, and they're trying to send $50 billion to pick a country, and we don't have $50 billion, guess where the money's coming from? The Fed's printer. So printing more money and um, it's not a creation of wealth, it's a creation of perceived value, but it's also going to drag the dollar down overall because you're just printing more money. Not helpful. Like if the money tree idea existed, we'd all love it. The problem is the more you shake it, the more it dilutes the value. So the Fed's not helping. So you've got an economy chugging along in hopes of what will happen in a month. Less red tape, more energy availability, better pricing on energy transfer, everything. And that entire industry galvanizes the rest of it. So yes, we're hopefully looking forward to that. You've got the Fed fighting to maintain power. Powell's like, nope, I'm not going to give up my seat in advance of you appointing somebody different. Fine. President Trump will appoint somebody different. And guess what? We'll have a new Fed chair. We will for sure have a new Secretary of Treasury because the current one resigned, or I guess the former one resigned, and left just an absolute clusterfuck in her wake for who will take the seat. And it's not like they could do a worse job. I mean, the bar's pretty low. The problem is there's a lot of stuff to fix. So in the coming market, we have somebody who is an entrepreneur, somebody who understands small businesses, somebody who understands how to manage a budget, somebody who understands we need to finance and leverage debt. So somebody who can adequately fulfill the role and hopefully more than adequately fulfill the role because there's a lot of shit going on there. We need somebody better than the average bear managing that position. And that person, oh, look, my cat's making noise. And that person's going to have a lot of real dealings, networking, I guess you could say, with the Fed chair, whether it's Jerome Powell or whoever the next person is. And together, perhaps, hopefully, we can steer the economy forward. In doing so, everybody's afraid of Trump's tariffs and how they will incite inflation and more spending. And if you listen to the news, who lies about the economy and who lies about how amazing Jerome Powell is, they'll also lie to you about tariffs. The U.S. budget used to be completely funded by tariffs. And you can argue that the times were different, but the US budget used to be completely funded by tariffs. So since it's not, it's like less than 0.5% is funded by tariffs right now, which means the weight of all the taxes is coming from you and me. So if tariffs replace taxes, then Elon Musk and Vivek, I honestly don't know how to say Vivek's last name, but if Elon and Vivek really do take on and audit the IRS, and then they audit the Fed, and we really get into the overall taxation of things and the inflation of things, and Trump's tax promises come through in the sense that they either lower taxes. I mean, our tax bracket's 22%. If we drop 10%, that's amazing. Currently, we're paying the government more money than we're paying God, which automatically, in the government's mind, usurps God's position as God. And that's what big government does. Big government says, I'm God and I can fix all your problems. Give me all your money and all your power. And that doesn't help anybody. It helps government, doesn't help you. So if we can trim what the government takes, that gives more money in your pocket that you can then do more with. Right? The quest is not more with more. The quest is to do more with more. So maybe I said that wrong. The quest is not more for more. The quest is to do more with more. So if we cut taxes on the people and we fund the budget through tariffs, then that takes pressure off of you and me. It also means our tax rate goes down. That's a good thing. That's scary to Washington and all of those contractors because that's who's getting the money, right? The government itself has 10 to 15 million employees, which is crazy. Think of how many people that is. That is crazy. Then you've got another like 12 to 15 contractors that are also considered government employees. So the government itself is maybe 27 million people, 90% of whom are not actually occupying an office seat, like they're working from home or working abroad. If we can cut those numbers down and trim budget offices, like we can cut those numbers down and trim budgets and decrease the needed taxes, pay off our debt, and actually leverage our debt better, then that takes more pressure off of us. It also puts more money in our pocket, more money you can invest or save or tithe or do whatever with, right? It's a quest. It's not a quest for more. It's a quest to do more with more. So you have all of this going on at the same time as the stock market. So the Fed goes, hey, we're going to cut rates, but we're not going to cut as much next year. But it's all speculation based upon what they hope goes, not upon what the Trump administration is trying to do. So the Fed goes, we're going to cut rates, but not so much next year. And all the newbie investors went, whoa, maybe we will see a recession. And you see the dip in the market. Now, I'm not a panic person. When we started investing, the dips bothered me, really did. I mean, I would check on our stuff almost every day. And now, as I'm getting closer to buy stuff, I look every day because I'm trying to find the best deal. But honestly, 5 cents here, 10 cents there, that's not exactly uh, it's not exactly life changing in the grander scheme of things. But I don't panic like I used to because it's a different mentality. If you're day trading and you're stressed about the buy and sell marks for the day, I can see how that would be stressful. And I would encourage you to find a different strategy. If you're investing for the long term, or at least the swing trade long term, in the sense of you're going to buy something and hold it for a set amount of time, 6 to 12 months, take a 15% profit, whether through dividends or actual price escalation. You sell it and swing your profits forward. I get that. Allergies, I apologize. Um, if you're also just going to buy and hold it, then you want the gains. Like you'll collect dividends over time. You'll also see price escalation over time, but you'll also see dips because dips happen. And it's not being scared by the dips, it's using the dips to your advantage. I'm going to cough again. I can feel it coming on. There's no way to stop it. All right, it's just going to come and go. Um, Now I don't generally spot seeking alpha articles on my channel because I don't pay for them. I read the free stuff, but there are two articles that they posted this week that are interesting. And I'll show the top of it. I'm not going to show the rest of it. But if you want the article, then go to their page. I mean, if you want to pay for it, you can pay, I think it's $5 a month for their stuff. But they generally advertise things that are contrary to our strategy. And it's and yes, this is our existing Roth portfolio on Weeple. So I like articles in the sense that I like to be challenged. I like somebody to tell me their strategy and I can say, hey, that's neat, or I can say, hey, that's cool, but that's just not us. And a lot of what Seeking Alpha puts out is it is strategy and it's extremely detailed strategy. However, it's very divergent from our strategy. It's mostly individual stocks or precious metals or ETFs, and stuff that's just not closed-end funds. But they did drop one closed-end fund article this week that's interesting, but it's also looking at closed-end funds in a different way than how I look at them. So I'll show you the first one, which is not closed-end fund. And we'll look at there. We'll stop it there. So Sam Smith drops this article through Seeking Alpha, and he highlights these things. And that's a pretty good overview of my view of things. It's look, it's this. Dips are a huge advantage. Now they make people panic pending your mindset. But if you're in it for the long road, you can use the dips to your advantage. So if you have a favorite fund, right, or pick any fund, we can invent a fund. If your favorite fund is at $7 and it dips and it loses value, say it drops to 650, right? The dividend stays the same, but since you bought it lower, you automatically get a higher dividend. And if the company raises dividends, you get an even higher dividend. And since you bought it lower, as the price escalates, you get a bigger investment win, right? And that's essentially what he's going to talk about, except he talks about it through individual funds and precious metal funds. And that's just not my style. This guy talks more about closed-end funds than the other guys because he talks about high dividend opportunities. However, he's looking at it through a very different lens than us. So if we close these tabs out, so the two funds he talks about in his article, one we own. Uh, yeah, if you want the other one, you can read his article. But he's buying dividends based on dividend yield. He's not looking at anything else. Now, he's looking at if they can fund the dividend, yeah, but he's not looking at any other metric. If you remember the system, we're looking at discounts. We're also looking at historic discounts. Now, if I were to sort my list like normal and get into all of this stuff like normal, this batch makes the cut for the week because they're all at discount, right? And these two are at discount where we are. All of these are at discounts that are double or close to double of the historical discount, but they're also above the 5-year discount. So they are significantly discounted based upon the fund's individual history. Now, the funds that are newer, like 3 years or less, especially a year old, the parameters are a little looser. But for the bigger funds that have been around for a while, That's the parameter. It's you've got to be double the historical discount and you've got to be greater than the 5-year discount. So you get an amazing deal based on the current economy. But that's different from these funds. Like we own these three light blue funds, right? So the current discount 14 and a half, historical minus 12. It's greater than that. 5-year discount's about 10, almost the same thing. It's greater than that, but it's not double the historical discount. So it doesn't meet the target list. And premium just means if we ranked things according to discount and premium, let's see, we have we have something close. If it was a 0%, it would mean for every dollar invested, it's costing you a dollar. Versus if you find something that's 1% off, it's like paying 99 cents instead of a dollar, right? So at the very top of the list, HFRO is still holding strong, close to 60% off, meaning it's 40 cents for every share invested, or 40 cents for every dollar invested, meaning you could almost buy two shares, right, for the price of one. But on the flip side, and the number is true, I looked into this, and the number is it still holds true. But for this one, instead of a dollar, it's $1.79. Instead of it's like paying $1.79 for every dollar invested. So if we go back up to OXLC, you can argue that it's close to, let's see, their targets in reverse. There we go. You can argue that it's close to break even. OXLC very rarely dips below zero. We bought it when it was 0.2% below zero, but we still got it at a discount. And that's kind of the thing. If it's break even, I understand. Like it's 1 to 1. But when it's over that, we're not paying premium. So even though it's 3.5 cents over a dollar, it's still premium. But the guy's buying it because of this crazy yield. And it's a yield they can maintain, right? And honestly, if they grow the yield back to what it used to be, it gets even crazier. And people buy for the yield. So they're willing to pay more than what it's worth to get the yield. So if you can buy it at a discount and get an amazing deal, you wait for everybody else to bid up your favorite company, and either A, you get the increasing dividend amount, or B, you sell it when it's at a high premium and then carry the investment forward. But that's very different from us. We're looking at things that are discounted. So since we're ending up with the same two, like I pre-sorted it, I could go through the same thing. I could go through the exact same thing and end up with the same recommendations as last week. But when I was looking at this week, I wanted to give you more insight. I wanted like to talk about what I've talked about. And I could give you the same exact reasons, but y'all know I hate repetition. Um, Especially when I say the same thing week in, week out. So of these two, which one would I buy? Now, this dividend share amount is not actually these dividend. It has a different meaning. Uh, which of these two would I buy? Based on what we have, I would buy HFRO because that's what we have. But in the greater scheme of things, FSCO has the momentum. It has a quickly narrowing discount. If we look at how it's been for the last year, it started out at 13. It was bigger than that last year. Closed-end fund investors, not me, I guess you could say. And I know it's not everybody, but there are a lot of closed-end fund investors who don't like new things. So when a company completely changes from bonds to real estate and never really explains it, that's really shocking and new. And they shy away from the investment until they can figure it out. So that's part of HFRO's issue. The other part is the self-investment into the management fund that manages the company. I get their portfolio. I get where they're invested. I get how they're invested. I like it. They're set up well, but they've never really fully explained everything. And so their discount, they haven't been able to really kill. Like I took off two previous videos. So from a month ago, it's still the same thing. dropped a little bit, kept the same. They had a shareholder call between these two videos, pretty much the same price. We have the dip, it opens back up. So, as much as I want that discount window to close, it could close 5 or 10%, and this price isn't going to really change much. I would like it to change. I would like to see positive momentum instead of the same kind of leveling share price. And it does go up and down, right? And the overall goal is for them to get more square feet online and more square footage active and more things rented, and they will. But it's this feeling of, and maybe I'm completely off base. Maybe a month from now, HFRO will be at 633. Who knows? I mean, that's the market. But the current momentum is with this company, and they're almost better set up for the coming market. In the share call they had between the Contrarian Outlook lead that was put out through a Brett Owens article maybe 2 or 3 weeks ago, they're set up for the existing economy. They're incredibly set up for the coming economy. And it's kind of weird to talk about economies that way, in that we have the overall economy that's chugging along right now with the present leadership. But in less than a month, we get new leadership with new policies, new regulations, new standards, new expectations. So we get an overall new administration, and we have people within that administration who are ready to step in the door day one and make progress by day two. That's very different than the status quo expectations of right now. So FSCO is ready for now, and they've made gains in this economy. As a BDC for a coming Treasury Secretary who's an entrepreneur, small business guy, money guy, budget guy, lending guy, leverage guy, a BDC is extremely well set up, especially when it's already established and humming along right now at 2.3 billion in assets and growing in assets. They are extremely well set up for now. They're also extremely well set up for less than a month from now. In HFRO, I would love to buy, like if we had it, I would buy a 100 pack of both because it is a new low. Or maybe it is a low. Maybe it's not the lowest thing we've bought, 5.2. But if we bought 5.3 or 5.33, yeah, it would bring down our overall average versus buying FCO at 6.82 of what it is right now, right? 6.82. It would be the highest thing we bought. So it would raise our average. But it's the overall scheme of things. It's long-term game in mind. And we're going to buy dips. We're going to buy different dips, right? HFRO's or FSCO has been humming along, that it dropped at 6.82, but that number is still overall higher than our current average. And that's going to happen as long as the price continues to go up. And of what it logically, of how I can logically, it's not convincing myself to do this. Uh, of why I would do it this way is really the momentum value. They're prepared for now and they're prepared for later. HFRO still has stuff coming online. And based on how it's tracked the last month and a half, it's almost like even if it raised 20 cents or 50, even if it raised 50 cents, it would still be an amazing buy. And it's like I can wait to buy it because what we would end up doing is transferring money out of there's dividend money gaining interest in our I guess you could say like a money market cash account. I would transfer that money out, not sell any stock. I would transfer the dividend money out, add it to this number, right? That gives us this almost 720 down here. And now there's enough funds to pick up a 100 pack of FSCO. The funds that we're still watching, this is that other account still with Webull. The two funds we're watching are these two, ZTR and GLO. ZTR is it's utility and energy transfer heavy. GLO is tech heavy. And for the present economy, I mean, for the present economy, I would, And I know where assuming gets us, but I mean, tech has been just off to the races. And GLO has been lagging behind. This is kind of weird to me. ZTR, utilities and energy transfer, has been off to the races, and yet they're still lagging behind. So it's either the inner workings of the fund or it's the management team. And I don't know which it is. My hope is with a different administration, they take off in the coming economy, and we'll see. So the value in waiting is that if they took off, I mean, we can wait until April 15th to add money to our, uh, so the current tax year for 2024, we can wait till April 15th, 2025 to add money to top off our 2024 Roth. And so we essentially you can top off your Roth from the previous year on April 15th, and then either same day or next day add money for 2025. And I want to see it's the patience thing. I mean, yes, we could sell both now, but we're still like we're limited on 2024 what we can put in, and then we'd be waiting to put in money for 2025 because it hasn't happened yet. Or we can just patiently wait and see if anything changes in the coming economy. And if they cannot make grounds in the coming economy, then yeah, we'll sell them because I mean I don't like losing money. I mean overall value we've only gained through dividends, or we're only positive, I guess you could say, through dividends. Overall, it would be selling each fund at a loss. So I'm not paying capital gains, just selling the funds, taking the money out, moving it to a different place. But I would like to actually break even. I mean, I would love to make profit. So I lost my train of thought. It's like I'm convinced to wait, or at least I'm willing to wait to see how things go. But in the meantime, we'll transfer the dividend amount out of that so we can add it to what we currently have, and then we would pick up enough in order to buy 100 spot of this, and then we'll see where the fund goes, right? And then we still watch everything week to week. We still watch everything, and if HFRO gains $1, amazing. That's really good for us. We can talk about what ifs and why didn't we and all that all we want, but I think the better buy now is still FCO. A month from now, 2 months from now, whenever, if the price is right and the discount is still crazy, then we'll pick up another 100 spot of HFRO. But for now, of what I would buy tomorrow, because I would buy this tomorrow, my goal tomorrow would be to buy this. And yeah, we don't have it right now, but when we transfer the money over, we will. So I get this is a very different video than normal. Quite honestly, if you want to see how I sort these, then you look at the last week's video because I did the same thing I would do to get to. Um, I don't want to say it's a trick system where I just get the same things every week. But last week I went through every reason of why it's these two, and I kind of did that. I kind of did that today, but not in the same format. But those are my top two picks for the week, and it's pretty much the same reasons as last week, except this week I'm willing to wait on HFRO because this hasn't changed much in the last month and a half, maybe 2 months. 3 months ago, I think it was less. I'd have to dig into their history on closed-end fund connect, but it wasn't much less. I think the lowest it's been in the last 3 to 4 months has maybe been 50% off, maybe. Still an insane deal, still insanely priced, uh, but of where the current market is and where we're headed, I think this is a much better buy tomorrow versus I can wait to buy this at a different day. That's about the best way I can say it logically, or at least that's the best way I can say it and explain it to myself. And I didn't have this conversation with myself before I made this video like normal. Like I thought about this earlier today. I actually thought I could pick up HFRO and CIF instead of FSCO and get a better dividend yield out of it, but that doesn't actually work out. Uh, but even then, I still think FSCO is a better overall buy from CIF because FSCO has that BDC component. It has a better leverage unit, being both a bond company and a BDC than CIF, who is just a bond company. And if you've just found my channel and you're just watching this video and I'm rambling out letters, um, CIF is a small, uh, not small, it's a smaller asset company compared to FSCO. CIF has maybe 50 million in assets. FSCO has close to 2.3 billion in assets. So it's both a bond company and a business development company or a private lending company. And I think both aspects or having both aspects inside your business sets you up really well for the coming economy. So that's all I have for the week. Anything else I say will just be me circling back and repeating everything else I've already done. So uh, Christmas is in 2 days, and I have no idea. Oh, please tell me this didn't pause. Uh, for a minute, it paused. My computer pauses often. It's like, please not pause. I have no idea what your plans are for Christmas. Whatever it is you're doing, take time for you. And it's going to feel selfish if you've never taken time for you, but take time for you and rest and refresh and revitalize and be ready for another year. And I could go deeper, and maybe I should go deeper on a different video. See how to say this right now. If I can encourage you to do anything different this Christmas, anything, and I have no idea what you normally do. If you do anything this Christmas on Christmas Eve or Christmas Day or the day after, find a local church and go hang out at the local church. Slip in through the door. Maybe you know people, maybe you don't. But find a church and go hang out and go meet people and sit at the back of the room and find a quiet corner. And if you're a Christian and it's your church, that's different. If you're not a Christian and you've never been to church or you haven't been to church in forever, slip in the door, talk to people who talk to you. I mean, be kind to people, but sit in the back corner and have a conversation with God in a place where God is everywhere. But if you're not a Christian, it's not that you cannot feel God's presence where you are, because God is everywhere. You can have a conversation with God wherever you are. But if you want to put yourself in the best position to have a conversation with God and feel God's presence, even if you have the conversation and you're mad or you're angry or you're like you don't believe in all this, you don't believe in all the stuff. But if you put yourself in a position to where you're in a space where God's spirit is for sure, then you would sit in a back corner of church and have a seat and close your eyes and not stand for anything. You would stay quiet the entire time and close your eyes and have a conversation with God and talk to him like you would talk to your best friend about how and why you don't believe any of this stuff and see what happens. And whenever your conversation is done, however long it lasts, just sit there and watch people around the room and continue that conversation as needed. Because I can tell you without a shadow of doubt, you may not believe, but I do. And Christmas is not corporatism. It's not greed. It's not this outpouring of wealth. That's the cover of it. I mean, that if you look at current society, that is the cover of things. But Christmas, in its smallest, condensed physical form, is a baby born in a cave. And it's the promise of hope. And you're like, the hope of what? It's the hope. It's the hope to have a conversation with God and not need anybody else to have it. It's a conversation, or it's a hope of being loved for being loved for who you are, regardless of all the shit you've done. And it's a hope of being seen for who you are, regardless of all the shit that you've done. It's the hope of what's possible. Christmas is but the intro because the conclusion is Easter. And at Easter, when Christ proved everything he said, and we have the fulfillment of hope, it's the Christmas is the hope to know God's Son and get the best vision of God you ever got. And in Easter, it's confirmed that Jesus is God's Son. And in Easter, we get the promise of life after this death. And when you were born into this world, you were born with nothing. The world doesn't owe you anything. Everything you have, yes, is a gift, but you work for everything you have. And at the end of life, without Christianity and without God, at the end of life, you still have nothing. But with Christ, you have hope of two things. You have really three things. You have hope that you will have a second life and not end up in hell. You have a hope that you will be in heaven and not in hell. But you also have the hope that you will become a son of God or a daughter of God. And that simply means that you came into this world with nothing and you leave it with but one thing. If you are a son or a daughter of God and you know where you're going when you close your eyes on this planet, when you close your eyes on this earth, you awake in heaven and you awake to eternity. Christmas is the hope of that. It's like the whisper of that. Like, how could this possibly happen? And in Easter, we realize that. And in life, every single day becomes a spiritual battle of one thing after the next as we walk towards that. And I generally don't talk spirituality on my videos, but it's incredibly important that I do it today because it was on my mind right now to do it today. And I've learned to not ignore those things. So I have no idea what you're doing for Christmas, but go to a church, whether you believe or not, and have a conversation with God. Because if you want to actually encounter God's spirit, you can encounter it anywhere, your car, your bed, in front of a laptop. You can encounter it anywhere. But if you want to if you want like a surefire way to be like, am I in God's presence? Go to a church and you'll feel it. And if you deny it and you're like, no way, your body will respond to it. And it'll do things that doesn't make sense to you because your body will feel God's presence because God created you and your body responds to him. So whatever you do for Christmas, I wish you a Merry Christmas. I wish you hope. And I wish you the promise of hope, or at least finding the promise of hope. And wherever you are in your financial journey, I wish you well. I'll make another of these videos before New Year's. So we'll talk about whatever needs to be talked about then. But of wherever you are in your financial journey, keep learning, keep growing, and don't let the hiccups, don't let the drops get you down. Keep investing. Buy the dip. When everybody else is fearful, buy the dip, right? Use the current market for long-term gains. Have that bigger strategy in mind. And if you don't have a strategy, develop one and know your strategy regardless of what everybody else says. Right? I'm not saying don't be afraid to adapt it, but if our strategy of closed-end funds doesn't work for you, then find a strategy that does. There are several of them out there. They're really limitless in a way, but not all strategies are great. Right? So find a strategy that works for you and then know it and learn it so you can time your buys in the market. And if you want an overall system, you can find me on Instagram at the same handle, Adapted Perspective. And I talk about our 12 steps to financial freedom every single day. Even every single day because I post these videos on Sunday. But I talk about the 12 steps every single day. And I currently I'm in like the pre-planning phase of getting back into our way to step one, but it's working our way to step one of all the stuff to consider, and then it will be a daily dive into the 12 steps. And then I'll finally hit the end of the 12 steps and I'll circle back and I'll talk about stuff again. And it's all free. So I wish you a Merry Christmas. And if for some reason I don't see you before New Year's, I wish you a Happy New Year. And I'll say it again. It's if you want to find God this Christmas, if you want a surefire way to find God, talk to him wherever you are. But if you want to wait, it's like a surefire way to make it happen. It's a surefire way for you to actually feel God's presence. Find a church, go sit in the back corner, close your eyes, and have a conversation with God and see how your body responds and see if he doesn't speak in your mind. So that's all I got. Otherwise, I'll keep talking in circles. So I wish y'all a Merry Christmas, and I will see y'all in another video. Bye bye.